Hello, this is Brian Shannon from AlphaTrends.net. It's Thursday, the 4th of December, 2008, and we had another very volatile session here today. The market finished with a loss of 81 cents or 2.8%. It just remains real volatile. It's really hard to hold anything long or short for more than a few hours, it seems, in here. And that volatility has got to be leading to a much bigger move, fast move here soon, I think. The primary trend is lower, so that makes the odds favor further downside. But again, we have to be aware of any and all potential scenarios. We do have the potential that this is going to be a higher low in here. We still got the resistance up near that 29 and a quarter level though, and we've found selling recently, as a friend from Denmark pointed out, at the declining 20-day moving average. We've got a declining 50, a declining 200-day moving average. We're in a bear market. We had seen some encouraging signs the last couple days, and today we had a little bit further pullback. I was saying that basically I thought this was the important level short term for the market to hold. On a closing basis, it did. We can also look at a trend line like this and think that maybe we shook some people out there if there's a bullish scenario, but now we've got that 5-day moving average starting to roll back over again. So just a lot of mixed messages here, and when you have this many mixed messages like that, you have to be aware that the odds favor continuation of the larger trend, and we just have to be aware of all potential scenarios. So there's no reason to get long in here right now. I think you want to wait for for intraday, strength, and this afternoon I pointed out on the cues here, it looked like maybe it was going to get past this little inverted head and shoulders pattern on the 1 minute time frame. It broke above the neckline, which was coincident with VWAP, very quickly, and this is where that phrase "from failed moves come fast moves" originates from, because a lot of times when you have a level that's being watched and it breaks out past that level, it traps people in, and then people take the opposite direction. Once it starts turning lower, we had these lower highs and lower lows. I think it was right around in here. I said, be careful. This could get a lot more serious on the downside. The path of least resistance obviously was lower at that point, and then late in the day we had an attempt at recovery here. So just remains a very volatile market regardless of what time frame you engage on. So you've got to, we saw the market gap lower today. It tried to recover, just chopped sideways for most of the day. That failed breakout, and then a move lower. So it just remains a very treacherous market, and you have to be aware that it favors very short-term trades. And today I thought was frustrating. I made a little bit of money, but it just, the way it happened was just too choppy. I mean, look at all these stocks I traded. I traded, a dozen or so stocks, made $439 and probably spent $250 in commissions. So just a real choppy, frustrating environment to make money in. And taking a look at the USO, continued lower once again on even heavier volume. So no one's been able to find this bottom yet. It's just odds favor further downside. It's in a downward spiral here, and eventually there's going to be a good bounce. But there's been many good bounces, just like in the Nasdaq and all the other markets. Fact is, it remains in a downtrend, and it's undergoing some real strong selling pressure here lately. What the reason for that selling is really irrelevant. People send me all kinds of news stories, and I just typically delete them because I don't read the news. Everything that I need to know, I think, is really baked into the price right here. So just listen to the message of the market. It's saying that we're still in a bear market. The Russell 2000. Let's go back to the Nasdaq for a minute, because I want to continue to follow up on this. Again, I'll point these patterns out as they look like they're taking hold. Like the inverted head and shoulders pattern, but you don't buy based on this pattern just because you think it's in this right hand shoulder. It's only completed as it breaks the neckline, and then if it breaks past that neckline, well, you still have to manage risk on a shorter term time frame. So pattern recognition is not a real important skill, I don't think. You're better off looking at multiple time frames. On the Russell 2000, though, we still have that pattern set up in here. I'd said yesterday that I thought the important level for this market, important support, was at that 43.40 level. We came down and tested it. We held it on a closing basis. So this market, intermediate term is more neutral than anything. uh, kind of looking like it's starting to break down. We had this run up, kind of turning sideways. If it breaks back below these lows here, and then in particular they take out the lows from earlier in the week, taking out the lows from earlier in the week in all these markets could be devastating and bring us back down to test the lows that we've seen already. So there's no clear signs of a bottom. We have all these people, saying, hey, that was the bottom. This is the one that's going to hold. There was absolutely no evidence technical that they're basing that upon. So just take all those bottom calls with a grain of salt. Look at price action only and recognize that, again, only price pays, and we're still having a lot of trouble in here in these markets. So just manage the risk. We're in downtrends, and odds probably favor a continued breakdown from here rather than these inverted head and shoulders patterns. It's natural to want to be bullish in here when you see such huge devastation, but you can't wait. You can't, purchase these markets until the technical evidence is there. And then when it does show up, even on the shortest term time frames, you have to have your finger on that exit and be ready to move out very quickly, because the moves are violent. They're sharp and they're fast. Semiconductors, again, the important recent resistance has been $17 a share. We're still below that, possibly making a higher low in here at about $15 a share. Yesterday I'd said that the more important short-term support was right around here. We broke that level and then basically closed right on it. We've got this little uptrend line that maybe is holding. So there's a couple of reasons to think that maybe it's going to find some support, and tomorrow's just a neutral day. We'll have to wait till next week to get some real directional clues. But the primary trend is lower. We've still got, maybe we're forming this little triangle. I don't know. The volatility is constricting, and which way it goes is anyone's guess. But odds favor continued downside because that's what the larger trend is. We want to, I think I'm sounding confusing here, and it's only because the message of the market is confusing. Maybe we're making a higher low, but the primary trend is lower, so you have to look at it very cautiously, but just remain open to anything. Right now, I think tomorrow, based on looking at the chart today, tomorrow's going to be not one of the better days to trade. We'll see what happens. The financials, we're getting up towards this important level of resistance up near $13 a share. Possibly seeing the higher low in here, but these higher lows, we've seen higher lows before, everywhere in here, and then these higher lows eventually fail. But let's see if this, 10.5 level holds. Yesterday I'd said more important than that was this level at about 11.25. We do also have a trend line intact from those lows, about 2 weeks ago. 2 weeks ago tomorrow, and just very choppy. You got to be fast in here. They look like they break out. It came down hard with some volume. So when they sell off on heavy volume like this and then consolidate and try and recover on light volume, even when it's above the daily VWAP, be very careful in there. And in particular, when it breaks down and then that prior support acts as resistance here, that's where the next real shoe dropped in the financials. But financials remain a mess. We've got important level at about $13 a share. If it can somehow get above that, maybe it paves the way for further upside. But again, all trends are pointing lower. Have to be careful. So finally, the SPY was down $2.25, or about 2.5%. This, on a closing basis, continues to hold above these lows from October, and we're still maybe trapped. Some people in here. We've got the higher low at about that $82 level, which is still quite a bit away. This was the yesterday afternoon's low, which also held. So we've got a real mixed message from the market here. It's really a mess. We do want to continue to be aware of the potential of these inverted head and shoulders patterns, but the necklines are still too far away to really be taken seriously as far as any type of trading signal. So the short term prices seem to be breaking down, and it's possible that we come down below these lows and continue right back down towards the lows of this move. So It remains very volatile, very dangerous, and just manage risk or stand to the sidelines.